Welcome, everybody. Welcome to Zoom at 8. My
Welcome.
name is Julianne Peterson, and I am your host tonight, as well as all Tuesday nights for Zoom at 8. We have been here for almost 6 years. That's a long time to be putting me on your calendar, but there are people in the room who have been here that long. So, this is a community where we network and learn with industry experts, whether it's an attorney or a property manager or cost segregation or sponsors or lenders. We are here to help. You can build your team within this community. You can help get underwriting help. You can get your next partner. You can find capital here. So there's a lot going on, and being here every week can help you because we're building relationships. That is the significance of Zoom at 8 and really how commercial real estate is. It's about building relationships with people you know, like, and trust. So tonight I am excited to have our speaker. Courtney Moeller is here. She is an oil and gas expert. So you guys are going to learn a ton. But listen, if you're working on a deal right now, or you're thinking about working on a deal, I can help you with the lending. That is what I do full time. I'm also an owner operator. I'm a limited partner. I'm a general partner. I'm a capital raiser. I'm pretty special in that way. I don't just have one silo. I've got lots of silos that I can help you. So if you're looking for a loan, again, I would love to be your lender of choice. But if you're looking at something that says, I'm wondering if I'm pricing this correctly, I'm going to need your T12 rent roll, offering memorandum, and your underwriting, and I'll underwrite it. First with agency, because I love agency. It's non-recourse. That means we're not going to worry about what your assets and liabilities are to go get them. We're going to want to make sure you have net worth, liquidity, and experience. And if you don't have experience, you'll find that here. So we will turn these loans a quote for you in 48 hours. Okay. And we'll give you some feedback as to, does this make sense? And does the price that you want to pay or that you think you want to pay make sense? I have gotten into too many situations where we're backtracking. We got an approved PSA and it's coming in 50%. Remember, your lender is your biggest partner. So wouldn't you want to know how much your partner is going to bring? So check in with us first. All right. So let's find out who is in the room who can help you. Because if you've never heard of oil and gas and how to get into it, it's fairly new to me, but I am excited about it. And I'm excited because I met Courtney a while ago, and Courtney unpacks oil and gas like nobody's business and makes it so easy to understand and all the benefits. And so I thought, you know what, Courtney, you need to come in. You need to come speak with us because Courtney, while she is a U.S. Navy veteran, high five, she's also a #1 best-selling author, entrepreneur, international speaker, and an oil and gas expert. Why wouldn't we have her on here? She proudly served 5 years in the U.S. Navy as an aviation electronics technician, including serving aboard the USS Nimitz CVN 68. Anybody else been there in the Persian Gulf? She supported Operation Iraqi Freedom. So I can only be so grateful for all of her service and bringing us so much information tonight. She originally is from Midland, Texas. People say, "Oh, why should I get into oil and gas?" Here is a person who has spent her whole life starting in Midland, Texas, and she has been in the oil and gas in some kind of sector most of her life because her family has been in oil and gas from one aspect or another, from petroleum engineering to well servicing, pipe and water delivery, and drilling. She knows her stuff. She's been involved in the investment, exploration, and drilling for over 100 wells throughout Texas, Wyoming, Colorado, and North Dakota. So I am excited to bring here to you guys. It's going to be a phenomenal night. Welcome to Zoom at 8, Courtney.
Gosh, that was a mouthful, and thank you for having me. I see a lot of familiar faces and names on here, and I love talking about oil and gas. I feel like I just offloaded all the information on Julie. We got into that conversation, and it was just I don't know. I want to help people. It's such an amazing asset class, and I want people to learn. I want them to be able to invest in it and feel confident in their investing. And it's kind of scary. I've had my butt handed to me. I've lost money in the space and have done everything I can to kind of try to help investors navigate it and minimize some of that risk. But like she said, I'm from Midland. My dad was a petroleum engineer. My brother started as what you call a worm. That's when you have no oil and gas experience and you start out as a worm. And he worked his way up to tool pusher. And my uncle has a well servicing company. We have drilled oil. I've lived in Pakistan. I've lived in Abu Dhabi. My dad drilled in Indonesia and Jakarta for, 20 years before he retired. So we've drilled all over the world. And I actually really never thought that I would end up in this space. But I inherited my dad's company, gosh, back in 2011, and we continued drilling in the Permian Basin. That's where I lived. That's the number one producing field in North America, in the United States. And so that was kind of where my experience led. I really didn't know that I was going to end up in syndication. Up until a few years ago, I didn't even know what syndication was. And actually, where I met Robbie, I was asked to come and do a panel with Robert Kiyosaki. And this will be really funny to admit, I didn't know who he was. They were like, "Hey, we want you to come do a panel with Robert Kiyosaki and G. Edward Griffin." And I'm like, "Yeah, sure, let's do it." And then I'm Googling these people and I'm like, "Oh, hell, okay, I better get my act together." And I'm like, "Guys, I don't have a financial background. Like, how's this gonna go?" And it was actually really, really great. And I'm glad I said yes. And that conference, I learned so much. And I thought, God, I'm such a smart girl. Like, how have I never thought about pooling people's money together to buy assets? This is amazing. So, I've learned so much along the way. And, like I said, I've done some great things personally. I've done some things that, like I said, I got my butt handed to me, but they were all really good learning lessons, and I'm really grateful and thankful for them. And so, anyway, am I able to share my screen?
Yes, you are ready to
Okay.
roll.
So
What
I'm
was that conference, Courtney? Someone asked.
Yep, it was the Real Estate Guys Investor Summit on Sand in Belize, as a matter of
Okay.
fact.
Okay.
And so I met Robbie and I met a lot of other, I met some really, really amazing people. Those connections, are still going strong to this day. And I continue to meet amazing people like you, Julie, and everybody else. This is my favorite thing to do. I don't, my hobbies, they're like, "What are your hobbies?" And I'm like, "God, I want to talk about building wealth and what are people's strategies and how are they paying less taxes?" And this is what just gets me pumped up and excited. So I don't know if you want me to take questions as I kind of go through these slides, or do you want to save them for the end? I mean,
I think I have a whole list that I received from our dear friend Paula.
yeah. Paula,
Um,
Paula said she sent you a list of like 10
yes.
questions, and I was
Oh
like,
yeah, 14. Uh, and I think we'll probably I haven't read through them, so we'll get through them. Let's put them in the chat. Put
okay,
your questions in the chat, and when we finish, we'll go through those.
okay. And I'm a fast talker, so I'm going to try to kind of slow it
Yes.
down and let me share my screen. And don't anybody um, give me a hard time about my 8,000 windows that are open. That's just how I roll over here. Okay, can y'all see my screen?
Absolutely good to go.
Well, I'm just going to warn you now. I manage to always skip to the end every time I use this thing, so there might be some rewinding. So
Okay.
Okay, like I said earlier, I'm from Midland. Midland, Texas. A lot of people have heard of, Permian and Friday Night Lights and football. Guys, outside of football, there is oil. That is it. There is nothing else there. We literally used to ride pump jacks on a Friday night. We had different ones with names that we would, go and line our cars up and turn the headlights on, and somebody would bring a keg, and we would sit on pump jacks and drink beer and listen to music. And so, I miss, I'm in the DFW area now, and I miss being in that area. I miss that sulfur smell of, crude that's, being pulled out of the ground in those areas. And it's so amazing. My kids, when we left Midland, they were making $25 an hour in Midland as their general, the basic wages, because when the price of oil is up, everybody leaves and goes to the oil field. They all go to work in the oil field, and you cannot find workers to work in restaurants or anywhere else. So they have to really up that minimum wage. So when we got out here to Dallas, and my daughter was like, "Mom, they're trying to pay me $12." And I was like, "Oh, yeah, babe, we're not in Midland anymore. This is real life. It's a whole different animal out here." So, it's all we've ever done. I have got pump jacks, and these hard hats are hard hats that were my dad's. They're super cool. They've got his name carved into them. And I saw somebody's name on here as
Yeah.
Belcher. Belcher is my maiden name. And so, my dad's name's Robert Belcher. He drilled out of Houston. My brother is also Robert Belcher. He drilled primarily in West Texas and Big Lake and Pecos and all of those areas. But I love this space. It's such a special and exciting asset class. There's so many benefits to it, but it's difficult to get into. I feel like there's a lot of scam artists in this space. There's a lot of people lose their money because they're investing in one well and just different things, and they come in and they lose everything. So hopefully by the end of tonight you have a little more knowledge, you feel a little more confident, and are interested in this asset class. And I'm going to dig a little more into more than just the why, but why oil and gas? Why should you even consider this? Why do you even want to implement it into your portfolio? And I'll tell you, it is a great way to diversify. Some of my multifamily stuff hasn't been doing as well for this last couple of years. There was a lesson learned on, varying interest rates and things like that. And some of my stuff hasn't been, paying out. And one of the properties I was invested in, I just got a message that they have lost the property. It's been foreclosed on, which is unfortunate. But the great thing about oil and gas, oil has been really strong during this time. It kind of follows inflation. So if inflation is going up, the price of oil is going up. And so it's a really great hedge against inflation. And you have a really good potential for high returns. And the other thing I like about it is the income is monthly. When I first started investing in multifamily, and guys, this is not a knock on multifamily, but really the cash flow on it is not that great. Really, you realize your money that you're making when you divest, let's say 5 years down the road, where oil and gas is opposite. You're getting a lot of your money back initially over those first few years, and doubling and tripling your money, and it goes down. And so sometimes you can have a divestiture and sometimes not. We don't, but it is monthly. It's really good monthly income. So every single project is going to be different. But depending on what it is, we've got some that pays out, $2,000-3,000 a month. Some of it's paying $5,000-6,000 a month. It just depends on where we're drilling, who we're drilling with, and how much oil we've got in the ground. And then the tax advantages. If you are not familiar with the tax advantages, I'm going to dig into this a little bit more here in just a minute. I'm going to go further in depth so that you can really get a grasp of it. But it can offset any kind of income: W-2, active income, passive income, capital gains. It can offset anything, and you don't have to actively be involved, which is really amazing. This was something that was instilled back, gosh, like 60, 70 years ago to incentivize exploration and drilling. Because guys, I don't know if you know this, but we need oil for everything. It is so much more than just gas in your car. If you are using anything that's plastic, if you're using computers, cosmetics, asphalt, any kind of sports balls, medical equipment, cosmetics. I mean, you name it, oil is in just about everything. We need it for a lot. And I don't have a slide of this up here, but a barrel of oil is about 42 gallons. And these are really rough numbers. I'd have to go back down and break it down, but about a third of that barrel goes to gasoline for cars. About another third goes into actual these products that I was just talking about. And another third of that is used for like diesel and jet fuel. So think farm equipment, jet fuel, and things like that. So only about a third of every single barrel that is pulled out of the ground is actually going to gasoline. So I love stats and numbers and things like that. I think it's very interesting. And so here is some of the criteria that I go into. So I love investing in this space. And this is something that I have curated and really narrowed down over years of personally investing and doing things like that. So there are tons of operators out there, guys. There's like 48,000 oil and gas operators in the United States. That is a significant number. Now, when I inherited my dad's company back in like the 70s, he would go and find, his best friends were landmen and geologists. They would go find oil in West Texas, and then they would go partner with Chevron and Texaco and these major companies and sell part of that interest to them. So through the years, they've continued to drill and do things, and I kind of got grandfathered in with them. So right now, we've continued to drill with ConocoPhillips and SM Energy and some of these other major operators, which is great. So for me, if I'm bringing investors' money into a deal, it's going to have to be a major operator. And the reason I like the majors is if Exxon's going to go spend $100 million to drill 5 wells, I know that they have the Harvard of the landmen, the geologists, the equipment, they have everything they need to go and plug away, get those wells knocked out, and they're going to do it fast, and they're going to do it as cheap as possible. Because here's the thing. I know all you multifamily people like to talk about skin in the game. These major operators, these are billion-dollar and multi-billion-dollar companies. They do not need our money. They aren't asking for our money. They're not asking for our investment, because this is the number one question I always get is, why does Exxon need your $5 million or your $10 million? And the answer is they don't. They didn't want it. But let's say Julie over here owned 5% on these wells. She happened to own the mineral rights, and she owns 5% of those 4 or 5 wells that they're about to drill, and said, Hey, Courtney, I'm willing to sell this to you. Well, I bought it from her. So it's not that I went in and partnered with Exxon. I just went and bought that interest from somebody else that was willing to sell it. So because we own it, we now have that working interest, and Exxon doesn't have a choice. They have to pay us what we own in each of those wells. So, and the other thing is a proven area. And I think I'm going to kind of dip back and forth between slides. Hang on. When I talk about proven areas, there are top producing areas in the United States, and these are the areas that I focus on. So you've got this Permian Basin, you've got the Eagle Ford, Anadarko, Niobrara, Bakken, Appalachia. That's going to be gas. We have a lot of natural gas up in the Pennsylvania area. I've actually got quite a few natural gas wells with Pioneer. My primary focus has been Permian Basin, Niobrara, and we're actually drilling 3 new wells in the Bakken with Continental right now, which I'm super excited about. So I want to be in these areas. If somebody's like, hey, we're drilling in Florida, I'm not interested in that. I want to be in these top producing areas. So it's got to be a top producer, and it's got to be a top producing area. I do not want to do anything called wildcatting. Wildcatting is when people are out drilling, trying to figure out if they may or may not have oil in an area. I don't want a wildcat. I want where I know they've got oil, they've got the pipelines and the infrastructure to get it out of there, get it sold. We want this to be as easy and seamless as possible. So these people, we just did a project in Colorado, which is also that Niobrara area, and I was really excited about it. It was a little outside of what I normally do. So What they did was they took some award-winning geologists and team members from Halliburton and Anadarko and some of these major oil and gas companies that had literally won awards for what they had done in the Niobrara. So drilling started in that area in Wyoming and Colorado back in like the 60s. Well, they missed a whole bunch of oil because they were just drilling straight down. Well, in 2008, they started going sideways. They started doing horizontal drilling. So they were able to tap into a whole bunch of oil that they hadn't been able to get to before. Well, this team from a lot of these major companies, they put together this specialized team of people that had won awards with all these companies to go in and drill some things. And so we were able to participate in an opportunity with them in October, November, and I was pretty pumped about it. And it has proven to be, it's probably going to be the best deal I've ever done. We just came online at the beginning of the month, and it's really, really exciting. So that was a little bit of a special deal. But, I want people that have, 20 plus years of experience. You have a lot of these people when the prices of oil is going up and we hear this drill, baby, drill, all of these operators come out all of a sudden. Everybody's an expert, everybody's an oil and gas expert, and I'm like, what is happening? And so I'll sit there and I'll take a look. A lot of people bring me deals and they're like, hey, can you check this out? And I'll look them up and I'm like, they've got 10 wells under their belt in the last, like, they just started drilling 5 years ago. And I'm sorry, that is not a specialist. And even if you've been in it for 10 years, if you're new to doing this, and you're drilling one well a year, to me, that's not where I want to put my money, and it's not where I want to put investor money. I'm not saying there's not some good deals out there. It just doesn't meet my criteria. So the permits, if you're looking at a deal, you want to find out, have permits been approved? Now that we have a new administration in the White House, we are not going to be battling permit approvals like we were before. They were getting stifled left and right. And so I was only looking at projects that already had the permits approved and pretty much either had already drilled or were in the middle of drilling, because they're able to determine in that drilling process if you've got oil or not. And so that eliminated a lot of our risk. So now that we have, we're going to be getting rid of a lot of this permit approval problem that we've had, that is not going to be as big of a deal. LOEs, these are your lease operating expenses. You want that to be 10% or less of your income each month. And it's really important to ask that, because I haven't found this to be a problem with these major operators. They answer to shareholders. These are big companies. I have found it to be more of an issue with the smaller companies where they're gouging you on monthly operating expenses. And if you aren't familiar, there's different ways that you can invest and own oil and gas interests. You've got mineral rights. You can have royalties where you just own a certain percentage and you're not responsible for any of the monthly costs. With a working interest, which is if you're wanting those tax benefits, you want a working interest, there's going to be monthly operating costs that have to be paid and covered as a working interest owner. So those lease operating costs every month, you want to make sure that they're not going over 10%. And you want to talk to the operators about what that looks like. And then this is another reason, this contingency for additional costs. And this is not every single small operator. Some small operators have been around for a long time. They've got the money to fund their projects. But a lot of the small operators I see right now, if they want to go drill these 5 wells, they're raising the money because they don't have the money to drill those wells. They're coming to get it from investors. So what happens if they break drill bits and problems happen? Because it happens. Do they have contingency money set aside? Are they coming back and doing capital calls to keep that project going? That's really important. I can tell you that Anschutz Exploration and EOG could give 2 shits about my money and what I'm doing. If they're drilling wells, they didn't need my money to begin with, and they aren't pausing to come and talk to me about stuff that's breaking. They're going to get that done. They've got the stuff to change it out, keep going, and they drill these wells really, really fast, and I like that. Saltwater disposal is not in every single area. It's only in certain areas, but you want to find out, is that something that's going on in the area you're drilling, and do they have it set up? The minimum of 4 wells. Guys, I will never invest in a project or bring a project to people to invest in that has it can't have anything less than 4 wells. That is my minimum. I don't know how many people I know that invested in a project that was drilling 1 well. The well ended up being dry and they lost all of their money. So the way that you do that, the more wells you have, the better. In fact, one of the things that I'm working on right now is multiple wells with multiple operators in multiple locations. So I did a really small last minute deal in December and I was really excited about it because it's 12 wells with 2 different companies in 2 different areas. That's fantastic because you're going to have some wells that are they're kind of slow, they're kind of your underperformers, you're going to have some average ones in there and you're going to have some overperformers. So you want to make sure you've got multiple wells in there, so that if one of them doesn't, I mean, I think the way we do it, we're not really going to have a dry well, but should that happen, you still have 3 more wells that are going to produce, so it just helps to minimize that risk. We are always looking at trying to return capital in 18 to 24 months. Now, right now with, oil at $70, we're not hitting 18 months. It's gonna take a little bit longer. But when we were up at, $85, you're gonna get your money back really, really fast. So find out, what's the return, what's the time frame on that return of capital? How quickly is it gonna be before you 2x your money and 3x your money? What does that look like? And what is that overall return? And also make sure that you're finding out, what's the return at $50? What's the return at 70? What is it at 90? What is it at these different numbers? Because oil and gas, it's going to fluctuate. It's going to go up. It's going to go down. It's not going to stay consistent over all of these years. I will tell you that if you take a look at the average of the last 5 years, even with COVID in there, our average for the price of oil is right at $70. $70 is a really good number. I like pricing things out at $70. That's a pretty safe place to bet on being at. And, we're looking at probably between, I think, 65 and 85 or $90 oil for 2025. I know everybody was thinking it was going to drop in price because we've got Trump coming in, and we'll talk a little bit more about him and what drill baby drill is going to look like and things like that. But with that, that return of capital, what's the break even price of oil for the project? So there's a number in there, and I've seen projects where their break even price is $75, which means that if the price of oil on the WTI, if it goes under $75, you're now, not only are you not making money, but you could potentially be having to, chip in money every month to cover those expenses. So you need to know what that break even price for that project is. That's very, very important. And then you need to know what is the expected production and what are they expecting those wells to produce over their lifetime? And then the offset production is all those wells that are right around where you're drilling. Are those wells doing what these wells are expecting? Because you're going to have some overperformers and some underperformers, but you want to make sure that those wells in the area you're drilling are doing what they're expecting the wells you're drilling to do, because they're all going to be kind of similar. Yep. And then obviously you want to find out, have they started drilling? Where are they at in that process? And when do they expect them to be online? So obviously there's, this can fluctuate and vary, but these are really, really, really good, important questions. Now, if I'm analyzing a smaller operator, I go into things a little bit differently. So with a small operator, one of the first things I'm going to do is I pick up the phone and I start calling all my oil and gas people. And I'm like, hey, what do you know about this company? I don't need to do background checks on Exxon. I know who Exxon is. I know what they're doing. But if I've got, Joe Moeller over here that's raising $15 million to drill some stuff, well, I don't even know who that is. So I'm going to do a whole lot more digging on what is Joe Moeller's experience? What's his background check? How long has he been doing this? I'm going to do a whole lot more. And let me tell you, the oil and gas space is a good old boy network and they all know each other. And so that's the first thing I do is pick up the phone and I call them and say, what do you know about this guy? I cannot tell you how many bullets I've dodged from making those phone calls. And I can see Paula shaking her head. She's like, yup, 100%. So, like I said, I don't invest in them, but for people that want to look at those smaller projects, you want to do the background checks. You want to check on these operators with other operators, verify their production. What are they doing? I cannot tell you how many people I know. They actually went out to visit a site and they were fake wells that weren't even connected to anything. In fact, I think they were connected underground to each other. And the cool thing about oil and gas interests, they're recorded just like real estate, guys, at the county tax office. So you can go in and verify this ownership. And I actually, you get what's called a well bore recording. And I believe I have a copy of it in here to share. So I'm going to go into that a little bit more, but you can verify that ownership. And then every single state out there has a website where you can go in and verify the operators. You can see their permits, the whole 9 yards. And I'll go through and show you that as well. So anyway, I do want to check a lot of the stuff that I looked at before, but with a smaller operator, I really want to know what their contingency for, additional costs are. Do they have, some funds in a bank account? What does that look like? I'm looking at pay zones. I'm looking at formation trends. There's a lot more things that I'm going to look at that I'm not going to dive as deep into with a multi-billion-dollar company, if that makes sense. Okay, we already looked at some of these major areas. So let's talk about the tax benefits. Okay, this is one of my favorite things about this. And just know that every single project is going to be different. It's going to offer a different percentage on what it can offset, and it comes from the intangible drilling costs. And I'll give you a little bit of an example, but let's say I saw a project the other day and they were drilling. They were also going to buy Bitcoin mining equipment. They were doing a whole bunch of things. Well, if you're not going directly into drilling and you're buying Bitcoin equipment and all this other stuff, that's less and less money that's going into the drilling cost that's taking away from your tax benefits. So just know that if they're buying water and they're buying all these other things, that is money that's not going to drilling costs. So our projects that we are acquiring, we are buying pretty much the interest directly into the wells. So, I mean, almost all of our money is going into that. Now we have to buy the lease itself, but then gosh, let's say we're doing a $5 million, project. We are going to have, I would say probably 3.5, 4 million of that's going to go into the drilling costs. It's very significant. So the great thing, like I was telling you earlier, is that working interest can offset any kind of income, which is amazing. It can be W-2 income. It can be active income. And I say active because there are certain types of investments that create active income. Oil and gas working interest creates active income. This can offset that. And for capital gains, there is no limit. I mean, I can offset $10 million in 1 year, but for W-2 income, there is a limit. It's $250,000 in a year that you can offset. And so it comes from the intangible drilling costs. And this is all of like the fuel and the labor and the intangible things that go into drilling the wells. And you do get 100% of it, but most of the time you're going to get, for our projects, we're in that 80 to 90% in year one, which is really great. And I'm going to break down what that looks like in just a second. Now, you do get the tangible drilling costs, which is the equipment and those things, but it's done at a slower rate. It's done over about 7 years, and it's such a minimal amount that I don't even advertise it or talk about it. But the other really, really cool thing is what is called a depletion allowance. So let's say you invest $100,000 and in year one, you also make $100,000. You're only going to be taxed on $85,000 because you get a 15% depletion allowance every year for the life of those wells. It never goes away. So you will only be taxed on 85% of the income.
On 85,000 of the income.
85% of the income. Correct. So let's see. Okay. Can y'all see all of that? Because the way all my little windows, some of the stuff is blocked. And so I just want to make sure. Okay. So let's say you make $500,000. You're in the 37% tax bracket. You've got $185,000 tax liability. You make $100,000 investment into one of our deals, and this one we're expecting an 85% depreciation from the IDCs in year one. That means it takes your taxable income from 500,000 down to 415. This is not reducing what you're paying by $100,000 or by $85,000. It's reducing your taxable income. So now your tax liability just went from 185 to 153. So that turns into about a $32,000 tax savings in that year. So it's really big. It's a big impact. So I don't do my returns with the tax benefits included in it. I leave that out. That to me, that's just like an extra bonus. But a lot of people come to me because they are trying to pay less taxes. I have a lot of doctors, a lot of dentists, a lot of business owners, a lot of real estate people that have sold stuff. And they're like, I had this huge problem. Can you please help me? And the answer is yes. Yes, I can. And so here are a couple of our K1s from some previous projects. I just wanted to show you this one on the right, this DW Wyoming #2. This was the very first project that I did. And we always anticipate about 80% depreciation. We ended up passing on 82.7 in this one. So you can see right down here at the bottom, you get an $82,000 K1 loss. So you're always going to get a K1. And I will tell you that we get them out by March 15th every single year. You will not be sitting around waiting for them in September.
We like that. We like that.
Yes, yes. And so I always I always share redacted K1s from previous deals to people because, I find it very helpful to be able to take it to your CPA and say, hey, how does this impact my situation? How does this affect me? That way you can really, really find out. And so, okay, let's get in a little bit to the due diligence. So earlier, I was talking about wellbore assignments and being able to verify that somebody owns something. So one of the things that I provide to all of my investors is this wellbore assignment. Now, obviously, I redacted who we bought it from because I don't want people going around me and things like that. So, and this is multiple pages. This deal on the left is multiple pages, but this was recorded in Converse County. We purchased this. If you actually get past this first page, you'd be able to see that, gosh, I can't remember if it was a 10% interest. I've done too many of these since then. Let's just call it no, actually, I think it was a 2.6% interest or let's call it 3. We bought a 3% interest. And so you can see that this was not for like a 300-acre lease and we're getting an assignment into anything that gets drilled there. We actually bought a 3% interest in each one of these 12 wells. Now, every single well that's being drilled, it doesn't matter what state it is, they get what's called an API number. And that API number is kind of like a serial number that the federal government uses to manage and regulate all of the oil and gas information for that well. And that number is important because you can come up, and I told you earlier that every single state has a federal regulating entity that regulates all of the oil and gas production for their state. Well, these wells were drilled in Wyoming in the Niobrara Basin. And so the Wyoming entity is the Wyoming Oil and Gas Conservation Commission. And so you can go to that site and you can type in either the API number or the well name, and you can get it directly. I actually build a spreadsheet out for my investors with the link that'll take them directly to it so that they can pull the information. But what's really cool about this is you can go in, you can click on this APD file at the top, and you can get the survey information to find out where that's being drilled, what direction they're horizontally drilling. You can find out when the permits. Right here, you can see this permit was approved on 9/26 of 22. Spud date is the date that the drill bit actually breaks ground and they start drilling that hole. So this well was started on March 20th, and it was completed and brought online in August of the same year. So it started producing in August, that same month. So August of 2023. And if you go over here to the left in this green number, at the time when I pulled this, it had produced 178,000 barrels of oil, 183,000 MCFs of gas, and 116,000 barrels of water. So you can go in and find out the latitude, the longitude, this well, let's see, TVD. This well is 22,000 feet deep. It goes 11,000 feet down vertically, and then it goes another 11,000 feet out horizontally. That is crazy. I mean, that's like 4 miles. How many? I don't know, about 4 miles long, 2 miles down, and then 2 miles out sideways. So these are really, really deep, expensive wells. Anytime you're fracking and you're going horizontal, they're very expensive. It's significantly more to go horizontal, but you have the ability to increase the oil and gas production by like 2 to 7 times by doing that. But it's much more expensive than just drilling a vertical well. So like I said before, every single site has this. And so this wellbore assignment, I like to say, hey, I can show you that we bought this. I've got my assignment. Here's the recording. It can be verified at the county. And then I like to come in and say, okay, we bought this. Anschutz Exploration was the operator. You can actually see we bought these wells. Here's this API number, and they can verify that Anschutz is actually drilling. You can find out all of the information, the permits. If they're in the drilling process and they finish that and they're going to frack, like you can get the intent to frack here. And I'll give you all a little expert tip here. If there's an intent to frack filed on this, that means they have oil in these wells. These companies are able to determine if there's commercially producible oil during the drilling process. If they get those drilled and there's not enough oil for them to bring online, they will plug them and move on. So if they're going to frack, that is a perfect indicator that, okay, they've got enough oil to where they're going to, stick a pump jack or produce it. Some of them have enough pressure where they don't need a pump jack. This area where we were drilling in Wyoming, they put pump lifts. I call them pump jacks. They put pump jacks on all these wells, which helps them, pull that oil out of the ground much faster. But this is how you can go in and verify it. And the great thing about this Wyoming Oil and Gas Conservation Commission is every single time we get distributions from the oil and gas company, we can go in and take a look at what was reported federally to the government and make sure that what they paid us is what they reported. So it's a great system of checks and balances that's done all through third-party governmental agencies without having to verify if I'm giving you good information or not. It's all verifiable and public. And so every single state has this. Texas is the Texas Railroad Commission, and I spend a lot of time on these sites. So, all right. Earlier, I talked about offset production, and I actually meant to put the wells that went with the wells that were on the previous page, but this was another deal that we did. And the wells that we were drilling was with EOG, and the 4 wells were right here. We are expecting about 800,000 barrels per well from these wells. So what we do is we build out this page that shows what the other wells are producing. What have they done? I'm just going to pop up right here. Here we are. This well, and this is, gosh, and about an inch, I think, is like half a mile. It's not very big. So, I mean, literally from these stars where these wells are to the top left one, that's probably 20 miles. I mean, this is not a big radius. This is a pretty tight, compact area. So you can see that the wells right here to the left, one was drilled in April of 2021, and it had already produced, 380,000 barrels. The one right above it was drilled August of 2020. It's produced 414,000 barrels. So, when we were drilling our project, which was about August of last year. So it had been about a 3 to 4 year time frame that these wells were hitting this, 400,000 barrel range. And if you look over here to the left, you can see This one, this Arbalest, it was drilled in 2018 and it only had 382,000 barrels so far. It will probably get to where it produces more, but it's just producing slower. And then you've got some of these that, hit 670 and 650. Gosh, this one's hit 1.1, million barrels. So, I mean, that's where I was telling you, you're going to have some that overproduce, some that kind of underproduce, and a whole bunch of these that are pretty average. So I like to take all of these numbers and figure out what they produced in year one, what they produced in year two. It takes me a little while because I have to create it on a spreadsheet and I have to input it month by month, well by well. And it takes me a while to do it, but I love being able to visualize that data and find out, what is the average for all these wells in year one? What was the average in year two? And, how does that fall in line with what we're expecting with what we're drilling? So I hope that makes sense. I find it very useful. And like I said, I love data. I love spreadsheets. I love being able to look at all of these things. And in that spreadsheet, I also tie the links directly to the Wyoming Oil and Gas Conservation Commission. So people can go in and they can look directly at that and they can get those production numbers and see for themselves that, the information I'm supplying is accurate. Oh, here is one of my beautiful spreadsheets from those wells that we just did. So, I pull them all out. And if you list them out with what they did in 2015, 16, 17, that's not very helpful because I don't know, this one came online in June and this one came online in March. So I actually go in and I have to go, okay, if it came online in April, okay, what was the production from April of this year to March of the following year? So I actually go in and pull that 12-month, time period. And this one got cut off, but this looks like it was about 245,000 barrels in year one was what we were expecting. And at the time when this was going, the price of oil was $85 and we needed about 250,000 barrels per well to return capital. And so we were trying to figure out, are our wells going to fall in line with that? And so at $85 that we were really confident. Like I said, I have it built out on a whole bunch of other numbers, but we felt really good that we were going to be able to hit that 250,000 barrels. And so anyway, this is what one of my spreadsheets looks like. This is, the information and this is what I share. I know it's a lot and I'm hitting you guys with a lot. So, I'm always willing to go into any of this, deeper or not. And so, okay, let's talk about the risks. I know I've hit a little bit on, some of this as we have talked. The hardest thing about oil and gas is it's not like multifamily. We can make the best estimates and guesses that we can make on what's in the ground and what these wells are going to produce, but I don't have 300 doors and my rent is this much and these are I don't have that. We are going to do the very best that we can to guesstimate. And, this is what, the maps are saying and, all of the technology and everything else. But at the end of the day, I don't know how well those wells are going to produce. Like, is it going to come flowing out like crazy? Is it going to trickle out and it's going to take longer? We don't know until those wells actually come online. And sometimes it takes several months for them to kind of stabilize and figure out, where we are. It's not immediate. And so it's tough. I have people are like, okay, how much am I going to make every month? And I'm like, I can give estimates. I can guess, but I can't just give you this is what's going to be, this is it. There's a lot of fluctuations. The price of oil affects our returns, and I have no control over the West Texas intermediary prices. That commodity price matters. So how those wells actually produce and the commodity price, every single oil and gas project out there is susceptible to those two things. There is no way around that for any oil and gas investment that you're ever looking at. And if anybody guarantees anything, run as fast as you can because they are full of shit. So this no assurance that oil or gas will be found. and that if they do find it, there's enough for for it to be commercially producible. So several of my projects that we've just done, I can't guarantee what the price of oil is going to do, but a lot of people, they get their butts handed to them because they drill them and the wells are dry. You get the tax benefits, which is great, so it's not a total loss, but nobody wants to just make an investment and get the tax benefits. Like, we want to make our money back. So like the project in November, that I showed y'all that well bore assignment, I was really excited about that because they had already drilled all 12 of those wells, and we knew they had hit oil in all 12 of them. We paid a lot more for that lease. We paid a lot more for that interest, but I was willing to pay that because I knew we're going to get our tax benefits and we're going to get our money back. We've got oil in all of these wells. So I like that. I want to reduce the risk as much as I possibly can. And in doing it that way, like I said, when we're paying more for that lease, we are cutting into our return. But I would much rather reduce the return on it, get those tax benefits, know we're going to come in and 2, 3, 4x our money. But we're not gonna 7 or 8x it probably. I'm okay with that. I'm okay with the 3x in, a 6-year time period. And giving me 85% tax write-offs. I'm totally fine with that. And so when they haven't even started drilling, there's not any guarantee. But this is also why I like working with the EOGs and the Exxons and these bigger companies, because if they're going to go spend $100 million, and like I said before, you talk about skin in the game, they are covering the majority of that. You've got a couple of other little people like me that are bringing a few million here and there, but for the most part, these are their wells and their project, and they have the majority of the money, which means they're going to get those things on. They're going to drill them as fast as they can and get them online because they own the majority of the project. And then, so, I mean, they want to make as much as they can. They're answering to their shareholders. And I tell everybody, we're just kind of riding their coattails because they want to do the best they can. And we're just kind of reaping the benefits of what they're doing. So I know, even though could we possibly have a dry well? Yes. Most of our projects were coming in after they've already started drilling, or they have finished drilling and we're waiting for them to come in and frack. So we know we've got oil, but I'm not nearly as worried. If we've got a bunch of wells with one of these major operators, I know we're going to have oil. Could we potentially have a dry well? Yes, but our technology's gotten so good. Their technology has gotten so good. We drilled 28 wells in this last 12 months, and we've had, I can't say the last 3 that we just started right now do, but 25 of those 28 have, we're 25 for 25. And I'm going to know here really quick how those other 3 are going to be here within this next couple of weeks. Okay, delays in drilling. This is also where these bigger operators, they break drill bits and they got equipment sitting on the sidelines. They pop that one off and they throw that next one on and they keep going. These guys, gosh, that Colorado project, these guys this is what they specialize in. They drilled 4-mile wells in 1 day short of a month. They drilled 4-mile wells in 29 days. That is insane. Like, that is great. I have some smaller companies that I invested with a couple of years ago. Oh my gosh, they were trying to drill this well. I mean, a year later, they were still trying to drill. And I'm like, I don't even read their reports that they send anymore. Because I'm like, I don't even know what y'all are doing over there. Anybody that's still trying to drill a well 12 months later has lost their minds and they're wasting people's money. Like, I'm just going to write it off as a loss and I'm done. These bigger guys, they specialize in these areas. And when I talk about specialize, I like to use a medical analogy. So take a general surgeon. A general surgeon can operate successfully on pretty much any part of the body, right? But if you need heart surgery, you want a cardiologist. You want a doctor that specializes in the heart. Well, let me tell you, drilling in the Permian Basin is different than drilling in the Niobrara, is different than drilling in North Dakota. It's different than drilling in South Texas. They're all different, and they all come with their different challenges and their different issues. Can they all do it? Sure, they probably can. But like a heart surgeon, he knows the intricacies of the heart and he's going to be able to get in there and navigate and know what he's doing with his eyes closed. It's the same thing with drilling in these areas. So I want to drill with people that specialize in the areas they're in. And like Continental that we're drilling with in the Bakken, they are the number one operators in the Bakken. They're multi-billion dollar company. They are the number one operators there. I am so pumped about those wells that we just started with them this month. Um, Anschutz, they are the number one operators, the private operators in the Powder River Basin. They're huge. That's what they do. I mean, it's these different companies and operators are different specialists in different areas. I like working with them. Um, okay, this monthly operating costs exceeds monthly production. This is what happens when your break even price, let's say your break even price for the project is $40 oil. We live in that $35 to $40 price range. Right now, oil is sitting at like 70 bucks. I actually hadn't even looked at it today. But let's say oil drops down to $20 next week and it stays there. Now, if it just fluctuates and goes down and comes back up, that's not going to impact us. These companies sell oil, they do lock in, 30, 60, 90-day contracts. So the day by day variations and fluctuations in the price of oil don't impact them. It's when it drops and stays there. And it depends on when those contracts ended and they were coming up for renewal as to whether it may or may not hit you. COVID didn't hit me at all. It did not hurt me. I actually got I've had to write a check one time to cover my monthly operating expenses. I've owned my own working interest since 2011. So I mean, we're going on 14 years now, and I've had to cut a check one time. And it was actually in 2016 when the sanctions were lifted on Iran. I don't know if y'all remember that or not, or if you pay attention to that, but COVID didn't impact me. And it's because our contracts didn't end when the prices went sub-zero, but it did impact a lot of people. So if the prices drop down below your break-even price, that means that you now are not making enough money to cover those monthly expenses. And before it sounds scary because you think, oh, cash calls and everything else. Like I know in multifamily, when I hear that, it's like, oh, it's $20,000 or 30. It's a lot. There's significant amounts. I will tell you, on $100,000 investment, every project's going to be different because you might own 2% of the deal, you might own 10, so it's going to vary. But you're looking at, I'm just going to say $1,000 is your part of the cost. And like I said, that's going to vary. It could be $300. It could be $1,500. It depends on how much you own of the project, but let's call it 1,000. So if the prices are down at 20, you're still able to cover some of that. So you could potentially have to write, let's say, a $500 check to cover those operating expenses.
Per
So
month?
yeah, it's a month. It is a month. Now, we keep 10% of our entire raise in an account because the numbers are going to fluctuate. The prices are going to go up, they're going to come down. We're going to get to a point where the prices are going to dip down. It doesn't happen a whole bunch, but stuff happens. And we keep a decent amount of money in account. So when that happens, we can cover it and we don't have to pass it on to the investors. And so, and that's why I asked, find out what their contingency numbers are. Do they have money to cover stuff if it happens, if the prices go down? Find out what that is. So those are your biggest risks, guys. Well, they're your biggest risk with me. The commodity price, how well are these wells going to produce? Because I can't guarantee that. We're going to try to go in with people that we know are drilling in good areas, drilling good wells, but I don't have any control over the price of oil, and nobody has any control over how well these wells produce. And so we're going to do our very best. Now, we talked a little bit about, buying into stuff that people don't really own. I've seen people sell working interests and they didn't even own them to begin with. I've seen fake stuff out there. I've seen Ponzi schemes. I've gotten my butt handed to me in Ponzi schemes, and we won't jump into that, but that's a whole nother, conversation. But that's also where my transparency comes from. When you go through something like that, it makes you see things in a whole nother level. But that's why I supply the information I do to people, is because I've gone through it. I've been there, done that. And transparency it's important. It's really, really important. Um, That's really about all I have for that. I know we have a probably going to have a ton of questions. I didn't have my chat on because I'll start reading it and then I'll get
Yeah.
sidetracked and I lose my train of thought.
Yes, I understand that for sure. So let's pull it up. I know we do have some questions that I received early on. So, why do states usually have 2 to 3 different reporting agencies that govern us, but do not talk to each other? Are they married?
I don't know what do you mean? Who asked?
Paula? Paula?
I mean that in some states, like New Mexico, North Dakota, we have different agencies that regulate. And sometimes when we're trying to either move leases or just be regulated and try to find out how they report to each other, we may have one commission and then we have another environmental group, and then we're both regulated by us, to us, but
Well,
they either have internal struggles or they have troubles with the BLM, or there's things that happen behind the scenes that have nothing to do with us that we don't know about. But when we talk to attorneys and we find out that there's been a problem with getting information between departments, and so they're angry at each other, but they don't hold up their drilling. It's everyone else's work that they hold up. So why is it that they can't just have one agency that clears
oh
like
my gosh, girl, that is so beyond, so outside of my pay grade. I
yeah,
will tell you,
but do you see that, Courtney? Because I see that in some states, and I don't know if that's just because they don't want us there, or
I haven't experienced that. And, New Mexico, I feel like there's different states that are a lot more friendly to oil and gas drilling, versus other states. That Colorado project, Colorado's not as friendly to oil and gas as like Wyoming. So, that Niobrara area extends from northern Wyoming down into Colorado. Well, when we were looking at that, I was like, okay, where are they at in this process? Because states that aren't very friendly, which is Colorado, they can hold up your permits and cause all these other, issues. And they were already drilling. So I knew that we weren't going to have to worry about it. The majority of those issues come up during that permitting process when you're trying to drill. Now, I haven't had to deal with BLM or any of those other environmental agencies and things like that. Fortunately, like I said, most of our projects we have acquired when they've already started drilling, and I haven't had to battle all that. And fortunately, because of who we're drilling with, that's their battles, and they've got teams that handle that.
because they're larger operators, probably,
Yeah,
right?
yeah, for sure.
I noticed that they have friends in regulatory.
But I'll tell you, oil and gas, just like I feel like real estate is a dinosaur. Like they haven't like changed the technology to record stuff and make it more efficient. And oil and gas is the same way. We have a deal right now. The wells came online on August 1st. It's with EOG. I am ready to strangle this company because we came online August 1st, but they have not started distributions yet. And I reached out to them and they're like, yeah, the revenue decks aren't done. And that was it. And it was like, okay, yeah, but what's going on? And I'm pretty sure, and I haven't shared this because I don't know this, but I guarantee you they have an interest out there and they can't figure out who it belongs to. I know that's what it is because half
That's a
these
landman, isn't it? I mean, that's not
yes,
a real
half
estate
these
professional. It's a
places, like
landman.
the ownership is like stacked up in crazy stacks of papers in like a shipping container. It's so
That's
I
oil and
know
gas. Yeah.
several people that are trying to really streamline that oil and gas ownership because sometimes it's really difficult to figure out who owns it and who owns what and what was that path. It's kind of crazy. So,
All
Yeah.
right, let's not go down a road that it gets too crazy. If you're new to this, that could get us crazy, not understanding it. But all right, what states are oil friendly? Which states are oil friendly, and how do we know? I know you showed the map, but how
those,
do you know where you should be going with the company? Okay,
well,
Alaska.
so if you just Google, top producing top producing fields, in the United States, you're going to be able to pull those maps. It's going to pull the Permian. It's going to pull, the Powder River Basin and the Niobrara and Anadarko. Like it's going to pull those basins up. I mean, you can just pull up, what are the top producing formations or fields? What are the top producing oil and gas areas in the United States? And you're going to be able to pull that information. I did a Google search and was able to pull that map that I showed y'all.
Okay. So what could somebody think about as a typical return? What would it look like? Cash on cash, multiplier, time duration? What
Yeah,
what
and that's
what's the
always
recommendation?
going to vary. It's going to depend on who's drilling, what those drilling costs are, how much it cost you to get into it, how much they're expecting those wells to produce. So obviously, like I said earlier, if you're fracking and you're going horizontal, those wells are significantly more expensive than if you're just drilling a 2,000 or 5,000 foot, vertical well. It's different, and that impacts your returns. Now, and you also have to take a look at what are the EURs? What are they expecting those wells to produce? Different areas are going to have different production expectations. So you got to kind of take a look at what are you paying to get into the deal? How much is it costing to acquire the lease? What are the drilling costs for it? And then what are they expecting those wells to produce? You kind of have to look at all of that. So you're going to see stuff all over the place. That very, very small deal I put together in December, it wasn't a crazy spectacular thing. We're thinking it's going to 2 to 3x your money. It's going to give about an 85% depreciation. It wasn't, the deal I did before that and the Colorado deal, we're expecting those wells to like crazy produce, and they've come online and they're actually overperforming more than what we thought they were going to do, which is great. That last project was not that. So I've seen everything from a 2x to a 7x. So they're just all going to depend on all of those different factors.
So time frame typically for somebody to be invested in a deal is typically what? 5 years, 7, 10, 20?
We stay in them forever. Like those
Okay.
Niobrara wells, they're going to produce for 20 plus years. You're going to get you're gonna 2, 3, 4x your money within about a 7-ish year time frame. And so to me, if I've gotten my money back and I've 3x'd it in 7 years, and they're gonna keep sending me monthly checks every month, by all means, I will cash that for as long as you want to mail it to me. Everybody always wants to know the exit strategy because that's I always know who my real estate people are. They're like, so what's the exit strategy? And I'm like, I don't
Sure.
have one. I 4x'd my money and they're still mailing me checks. I'm going to cash that. I don't care if it's $50 or $5,000. Like I will cash
Now,
forever.
so in multifamily, we get phone calls and they say, "Hey, would you like to sell your property?" Is that also what happens in your business where people say, "Well, I understand you own these. Would you sell them?" And how do you figure out how it would,
You got to have
the
it. You have
cost?
to have, yeah, there's not like we have to go in. Obviously, when wells come online, they're going to produce the most they're ever going to produce, and they deplete and they produce less and less every single year. Okay,
Okay.
they go down, and different areas have different depletion rates, and so the longer they've been online, the less they're worth. And so these oil companies, when they get to the point to where it's not economically feasible to keep these wells online, they'll figure out, can we go in and refrac and restimulate this and get the production going again? If the answer is no, they're going to plug them and move on. And so at some point in time, they won't produce anymore. I have wells in my portfolio that are still paying me today that were drilled back in the 70s.
Wow.
I will cash
Amazing.
that check forever.
Yeah, that's great. Now, is there any way to check? Is there any technology, advanced technology, to know where the oil is without drilling?
They've gotten better. I feel like in 2025 these days, guys, they ought to be able to take a freaking picture and be like,
Yeah.
okay, our pool is this wide and this deep. And, I mean, we have estimates. They do a pretty good job of estimates. I feel like at this point in time, it should be a whole lot more accurate. I was actually talking to a company the other day that has patented some technology that says they can do that. So we're going to find out. We will see. The technology is better now than it used to be, but it's still not perfect.
Okay. Can you roll forward unused deductions for future years, or does it have to be on that first year, or how does that
Not
work?
not for I will need to I don't think you can, but I need to verify that. I've never
Okay.
had anybody ask me that before.
Well, Matt is smarty pants, so that's why he's asking that. So maybe you could get back to us.
I know you can in like charitable donations and so many, you can use so much of it and roll it forward. I need to verify. I don't want to tell you the wrong thing. I will get back with you on that.
Gotcha. Okay. Let's go with one more. I know we're running out of time, but
I
I
know, I'm
just
sorry.
love
I
this.
talk so much.
No, I just absolutely love it. Um, so will you get a 1099 at the beginning or the end of the year? Is it a
You're going to get
1099 or is it a 10 K1?
It's a K1. You're always going to
Yeah.
get K1s. If you own a royalty and you're not covering monthly expenses, you're going to get a 1099. But if you're a working interest owner, you're going to get a K1. I love that Paula's over here shaking her head, confirming all the things that I'm saying.
So she wanted to know, and maybe she is asking the question so everybody else knows, what is a royalty and how do you convey it?
Yeah. Okay. So royalties are really cool. That means you own a percentage of the wells and you are not responsible for any of the costs. So you don't get any tax benefits, but you get to appreciate the upside of any production that those wells get. The really cool thing is you can actually what are the real estate exchanges? You can
The 1031
Yes,
exchange?
you can 1031 into royalties and oil. You can 1031 your real estate into royalties. We can do that. We need a little bit more time to make
Huh.
sure we find the right royalty, but you can 1031 your real estate into royalties, which is awesome. Um,
Is there any extra fees like you would do on a tick into
Not an
multifamily?
extra fees, but like
Okay,
I'm not going to do it for less than $500,000. Like
got
it's
it.
because it's a lot more in depth. It takes us a lot longer. Like we don't want to just go, it takes us a lot. Good working interests are a lot easier to find than good royalties. It takes a lot longer. We need probably a 60-day notice so that we can go out, figure out
Okay.
how much we need. And, there's a little more that goes into it. Not any additional fees or anything like that, but you can 1031.
So you tend
Answered the question you asked. I don't know. My brain spiraled
No,
off.
that's good. So if you're in a 1031 in multifamily, you can go into a royalty. Can you come back out and put it back into multifamily?
I'm sure you can. I have never dabbled in
Okay.
1031s. It's
Okay.
something that I want to start offering to people this year. My
Yeah.
partner's really good at it. I I will have to bring him on and he can tell you all the things because it is not me.
Okay. No, this is fantastic. All right. I've asked a lot of the questions here. Is there any, can you just say there was one thing that you just said, which was a charitable donation. So could you just touch on that?
Yeah. Yeah. So, last year, we did there's different donations you can make in different fields. I had access to one that was in the medical field. So let's say you donated $20,000, you got $100,000 write-off, and it was good against your W-2 income. Obviously, there's not a return. You're just multiplying your donation. And if you let's say you can only offset, I believe it's up to 36% of your AGI in each year. So if you make the $20,000 donation, you get the $100,000. If you only need 30 of it in year one, you can roll it over for, I believe it's either 5 or 7 years after that. So there's different types of donations in different fields. I know some in the medical field. I know some in the mineral field. There's some in different places. So I find that it's a great way to kind of pair that with oil and gas if you've got a little extra you're trying to offset. Like I said, there's not a return from it. It's literally just a donation.
Okay. So let's just talk real briefly. When you have a deal,
Hmm.
how long does it typically take to capital raise that? How long does it take before somebody would start to, well, you had said it kind of depends on getting their
I'm
money
so
back,
glad that
but
you asked that. Yes.
okay.
Okay.
And
So,
minimums to
yep.
come in with.
Okay, so it's going to depend on the size of the deal. You know, I did a $7.5 million deal in October. From start to finish, from the time we bought it, did the webinar, and closed it out, it was about 30 days. So it's pretty quick. I did a $1.6 million deal in December because I had tons of people that were like, I need depreciation. And the deal we were buying, it got pulled out from under me. I was super salty as the first time it had happened. And from the time we found the deal, raised the money, and closed it, it was 8 days. So it's the fastest raise I've ever done. So we did $1.6 million in 8 days. Now, here, I'm so glad that you asked this because I meant to bring this up earlier, and I forgot. The caveat to working with these bigger companies is I have no control over when they start paying out they start paying the working interest owners. It is typically 3 months after they come online. That's kind of the standard norm. EOG right now, our wells came online August 1st. We are still waiting for them to start those distributions. The great thing is that we started earning on August 1st when they came online. So we're going to have months. I mean, that first check is going to be, 6 months of, production in it. So like my Anschutz deal in November of 2023, those wells came online at the end of November. They started paying us in March. And that first check had, 4 months of production on it. And my investors got 25% of their investment back on that first check, which was awesome. They got 83% depreciation, and then, they've gotten, back. Now, obviously prices have dropped. I think they're at 50 or 60%, returned now in about a 12-month time period. I feel like that's a pretty decent, so pretty good numbers. But that's the caveat to this. We're going in. I know we're going to go in and drill in good areas, but I don't have any say over when those payments start. Like I said, it's typically about 3 months. Let's see, the deal I did in December, those wells are probably being fracked right now, so they're going to be online this month. I would imagine we're going to probably start getting paid for those in April-ish, sometime in the April. And the first 5 wells were with Anschutz. They're pretty good about it. The Colorado project that we did in October, November, those wells came online at the beginning of the month. I bet you it'll be March or April before we start getting those payments. And so I don't always have a person to call with these bigger companies. EOG is drilling 200 wells a quarter. I tried to call and find out who the team was that was working on our project, and the guy was like, I don't know, the wells are going to produce what they produce, and we're not done with our
Go away, lady.
orders. Yeah. And so yeah, we don't know. I don't always have insight, but I know we're going to have good oil. I know we're going to produce, but that's kind of the give and take to that. It's not I can't just pick up and call the smaller. Some of them I can pick up and call, not all of them though.
Okay. So, sorry to interrupt you.
No.
Accredited, sophisticated, non-accredited.
We do all accredited. We do all
accredited.
And
okay.
I did see that somebody asked about investing in from like a 401k or an IRA. If you are investing from a taxed sheltered vehicle, you are not going to get the tax benefits. And
Correct.
So you're going to need to come in as an individual. Wherever you need those tax benefits, if your entity needs the tax benefits, invest with your entity. But whatever you invest with, if you have a single member LLC, come in with that. And here's the other thing. You have to come in as a general partner. It's a different general partner than what you see in real estate, but you come in as a general partner. And then what we do is we convert you to a limited partner in the spring of the next year. I'm sorry, as soon as we convert over to the next year, we convert you to a limited partner.
Awesome. So are the minimums typically 100,000?
Mm-hmm.
And then would that be considered a 506c then?
Mm-hmm.
Okay.
Yeah.
Okay. So when would you think you'll have another opportunity that somebody in the group would, find it available?
I am going to be I'm looking for stuff right now. So I plan on doing 1 deal a quarter. I am going to be, like I said, we're looking for stuff now. I'm hoping to have it put together within the next couple of weeks or so.
Okay. So if somebody wanted to reach out and get more information and say, hey, I saw you on Zoom at 8 and I want to invest, tell me, how would they do that?
Yeah, you know what? Probably the best way, I have a report. It's oilandgasreport.net. You can go and download my oil and gas report. It'll put you on my distribution list. But I don't. Julie and I might be working together on a deal. So
Mhm.
I feel like Julie's the best one because But here's the thing: you can also, when you download that report, you can book a call with me. Y'all, if you really want to go down rabbit holes, hop on a call with me. I will totally talk your ears off and we can talk all things oil and gas. I'm happy to do it. I do that with people all day long. It makes my
Yeah.
heart happy. It really
Yeah.
does.
That's how I am with lending. So I
Yeah,
totally get that.
it is
Oh,
oilandgasreport.net.
look at, I screwed that up. Oilandgasreport.net. Thank you, Paula. Appreciate that. Well, you've been such a huge amount of energy and information. I just love it. We are
No,
cut from the same cloth. So I want to thank
you
you so
are.
much.
You make me happy. I'm telling you,
Yeah.
crazy fun pictures. I'm like, oh my gosh, you bring me joy. Yes, you really do.
All right. Well, I want to make sure that everybody knows Courtney is your oil and gas gal. She is such a wealth of information and has a true passion to help others. So I would recommend you jump on a call with her and ask all the questions. She can answer those for you. She might not have something now, but may certainly have something in the future.